Welcome to the final day of our final edition for 2023, our Live Trader Showcase. This is a quarterly event. This is Sherry, of course, your hostess, and this is a quarterly event where we feature expert traders to bring you trainings, tips, hints, and insights from many speakers. This time we happen to have 20. Please check out tradersexclusive.com where we put up our posts and our articles and video clips that have nuggets, golden nuggets for you to learn new trading tips and techniques. Before I get started, I do have to do the disclaimer. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance, of course, is not necessarily indicative of future results. This is our lineup for today. Michael, Daniel, Kenny, AJ, Michael again, Harry Boxer. Then if you need to reach me, it's support@tradersexclusive.com. And I want to thank our December sponsors. We have blue chip sponsors, Market Taker Mentoring, Hit and Run Candlesticks, and Vantage Point Software, Vantage Point AI. And also Mumu. Michael is a seasoned professional who's been assisting traders and firms in growing and maintaining their trades since 2010. He started his trading journey by obtaining a finance degree from St. Mary's University in 2006 and worked for a proprietary trading firm while pursuing further studies in finance and math. Since then, Michael's been fascinated by the market and has worked with hedge funds, prop firms, technology companies, and individual traders to hone his skills. Now, as a chartered market technician, which is kind of rare, isn't it? Michael leverages his technical knowledge and years of experience in quantitative and algorithmic trading to develop a unique trading strategy that combines the best of both worlds. And currently, Michael is working with Trade Ideas LLC to build scans and systems for their platform. And he also shares his technical analysis insights on statsedgetrading.com. Thank you for joining us.
Thank you, everyone, for joining me. Just making sure I got all this. We are good to go. So, as that lovely introduction was saying, we're going to talk about redefining relative strength and just a little subheader, how we are going to use relative strength to manage macro shocks in the market. And man, have we been seeing a lot of macro shocks recently. So I think this is perfectly timed as a good way to kind of show everyone about it. Now, as always, every time I do a presentation like this, I want the majority of it just to be some sort of education, whether or not you're interested in checking out Trade Ideas or not. At the end of the presentation, I will have a 25% off discount code for you. So make sure you stay tuned for that. But if you're not interested in Trade Ideas, my hope is that at least the first part of the presentation, you will take something away. So we'll get into this and then we'll get into the system at the end. So who is this guy talking? So you can see the pre-pandemic beard there and the post-pandemic beard here. So my name is Michael Nauss. As mentioned, I am a chartered market technician. For the people who don't know what that is, essentially a chartered market technician is like a CFA, which a lot of people do know. But the CFA focuses on the financials of a company, and a chartered market technician will focus on the technical analysis. So it's a designation certifying a study of technical analysis for years, 3+ years to get into it. But just a little bit about me. I started my trading journey in 2006 when I was in university. Back in that day, there was a lot of these prop firms around, which are different from the prop firms of today, where they're kind of challenge firms, but they would just recruit people like me, young kids, and say, hey, do you want to learn to trade? Are you interested in trading? We will give you money. We'll split the profits if you do well, and we'll eat the losses if you do poorly. So that was great. The only entry question there was, do you play video games? And I said, yes, I play StarCraft semi-professionally, and they hired me instantly. So just so you know, this was back in the day before all of the HFTs. It was more about, we were the HFTs, like hundreds of trades a day. It was crazy. But what it did give me is a great insight into how markets actually worked. So university, I was studying finance, and then I would literally run down to the trading floor after classes and then trade. So it was a good dichotomy of theory and practice. After that, I spent about 10 years working in the hedge fund space. This was around the Bernie Madoff time, where nobody trusted anyone. If you don't know who Bernie Madoff was, I watched the Netflix documentary a few months back and highly recommend that. It's a good synopsis of what's happening there. But basically, no one trusted anyone in the hedge fund space. So there was all of these independent auditing type firms. So what I did a lot of was fly and speak to hedge fund managers about how they were trading. We would audit their trading, make sure what they were doing was legitimate, try to figure out what the risks of their trading was, which was amazing because when we were looking, for me personally, it was amazing because I was able to figure out what all of these different firms were doing, getting a wide breadth of some of the professionals and what they are after. So I talked about CMT and Kaya, and then also again, CEO statsadtraining.com is my personal website, and there's just my Twitter. Just while I'm on the screen, I do have a speaker note to remind me, right? Trade Ideas is a software. We are a scanning and alerting software. We have algorithms and AI functionality and all kinds of cool stuff, but we're not investment advisors. All of that type of, right, consult your own investment advisor. I'm just some guy hanging out on the internet here. So just get that out of the way to make the lawyers happy. So before we talk about how we're going to redefine relative strength and how we're going to use relative strength to help out with these macro shocks that we're seeing all the time, we got to do some definitions. And I want to prove to you, hopefully, that this is a good way in order to help your trading. And as a quantitative technical trader, I'm going to get you some kind of math to do that, right? So when I say quantitative and technical, I mean that whereas a lot of people will take a fundamental thesis, say, I like silver because of this geopolitical reason, and then I'm going to wait for the chart to confirm that. I like to look at algorithms and say, hey, this algorithm is interesting to this algorithm is showing me that, hey, if I buy this thing here, that there's a higher probability that this will outperform the market. And then from there, I never just want to follow any algorithm blindly, but I want to apply my technical knowledge on top of that. So we're going to talk about relative strength. And again, I'm going to use this math to prove to you why this is a great asset. So relative strength, I've had this up for a bit, is just essentially comparing one asset's performance to another asset's performance. So you can think about, I've got a couple here, ELF. This is Elf Beauty Supply. I've had this one on for a long time as the example because this is by far and away probably the winner of the stock market this year, even maybe more so than AI and Ozempic type plays. This ELF Beauty Supply, I guess it got big on TikTok or something. That is the dark blue line, and the pink line is the S&P 500. So if we're comparing ELF's performance versus the S&P, as I was taking this screenshot, you can see, you don't need to be a CMT to know, right? ELF was dramatically outperforming the S&P 500. So a lot of people would define this or say this is relatively strong to the S&P 500. The other way to do it is to take two companies inside of the same sector and compare those, right? So you can compare Coke and Pepsi or Apple and Google or in this case, Eli Lilly, which, speaking of Ozempic, is up well over 100% this year. And then the pink line is Pfizer, which is down this year. So again, just showing that when we're talking about relative strength, we're basically saying which of these two is doing better. Now, why do we care, right? It's just one thing for me to come here and say, hey, invest in relative strength. It's a good idea, and then walk away. But I want to give you guys some mathematical proofs that we have. We don't have a lot of things that people can say for sure in the market, but what we can say, at least in all of the examples in the history I'll show you, investing in relative strength does a way better job than investing in weakness, right? And that's the main, I always say, I think the most harmful of all of the sayings in investing has been buy low, sell high, because it just does not back up based off the facts. If you were buying Bed Bath & Beyond low, right? It's gone forever. Was WeWork, you were buying WeWork low, right? That one's gone forever. So we're going to go over 3 studies. We're going to go over a Jadish study, we're going to go over a Black Star Fund study, and a Meb Faber study. So this Jadish, basically from 1960 to 1989, so that was when the study was done, but a wide period of time, essentially just went through and took all of the assets and said, hey, I'm going to buy whatever was strongest over the last 6-month period, sort the whole markets by whatever strongest over the last 6-month period, build a portfolio based off of those, and then I'm going to wait 6 months and I'm going to do it again. And I'm going to constantly rotate every 6 months into a portfolio of whatever was strongest over the trailing 6 months. And at least for this period of time, where markets were a little bit less efficient, so gains were a little easier to get, there was a 12% year over year return on the overall market, just by buying the stuff that was the strongest, doing the opposite of buy low, sell high, and buying the stuff that was the highest, and then again, rotating into that. So this was a study that was done, I believe, to 2016, 2005. So it's 1991 to 2005. So Jadisha study wrapped up in, was it 1989? And this one started at 1991 and wrapped up in 2005. The idea here was very simple of we are going to buy the stuff that, again, is the strongest. And how we are going to define this is stocks that are breaking out into new all-time highs. Because of course, if you're breaking out to new all-time highs, you are relatively stronger than anything else that is not breaking out into new all-time highs. And this chart's a little bit difficult to read, so I'll explain it quickly. Basically, this is all of the stocks that broke out to new all-time highs. They put a 10 ATR trailing stop on them. They just left them. And they said, okay, based off the amount that was risked, how much more did we make? And just split them all up. So you can see most of the gains, right? You're either up, 50% or 0.5 of what you risked, or you're down 0.5 of what you risked. But look at how many more stocks you got well over 1 times your risk, and some of them you got 15 to 20 times your risk. And then same, you only had a few that you actually lost more than your initial risk. Again, showing an asymmetric skew to buying new highs as opposed to buying new lows. Then they just built this portfolio based off doing the same thing, and they compared it to the S&P 500 over that period of time. So the pink line is S&P 500 total return, just means including dividends and all of that. And then this is the Black Star funds, again, just buying things that are hitting new highs. Just, again, compounding more and more evidence that buying things that are making new highs is way better than buying things that are making new lows. And those things making new highs are going to be relatively strong. Now, this one is one of my favorites as well, and this is by a Meb Faber, who has a great actual podcast, if you want to check that out. Essentially just took all of the industries out there and took ETF and sectors for each of those, just weightings on them. And our dark blue line here is the buy and hold. And then the green line is a 12-month buy of whichever sector was the strongest. So you buy the sector that's strongest last year, you hold it until it's the end of the year, and you rotate. And if you just buy the top one, you get the green line, which has the best return, but also a lot of volatility. If you buy the top two, you have the kind of teal line here, and the top three, you have the red line, which I believe had the best risk-adjusted return, so lower volatility and outperformance. Again, the idea being all this evidence showing that relative strength is the move, right? You want to be buying stuff that is relatively strong by traditional means. Now, why? Why does this work? Why have we gone back to 1965 now and then all the way to date and proved it through a whole bunch of studies that this is something that dramatically outperforms the overall market? Well, the idea is simply we'll never know why, but we can speculate, right? And we have some memes. I always put a couple memes in any presentation, but part of the idea, and this is very relevant now, I believe I'm Canadian, so your guys' tax rules may be different, but I believe it's the end of November that you had to have your tax loss harvesting done. For those who don't know, What tax loss harvesting is basically if I have a $100 gain somewhere, capital gain, I have a $100 capital loss. If I sell that $100 capital loss, I can net that off against my capital gain. Not an accountant, don't take any accounting advice I have, but the idea and the reason that one of the reasons that I believe that this relative strength phenomenon persists is if I'm a large hedge fund manager and I own AMC and I own, what was the ELF, the one that was going off a lot, and I have to rebalance my portfolio because the end of the year is coming. If I sell the AMC, which is at new all-time lows, I'm going to get tax advantage. And then if I'm taking profits on something else, then I'll have that gain to tax it off. If I have dividends, I can net these things off. By doing that, basically you have this giant institutional force selling selling things that are down, right? They're selling the stuff that's beaten up the most because that's the thing that they have the loss in. They're not selling the stuff that's up the most because they don't want to pay the government. I don't blame them. I don't want to pay the government either. The other one is window dressing. And this is another Wall Street-esque phase or term. But window dressing essentially just means if every hedge fund manager, institution, mutual fund at some point needs to talk to their clients. And could you imagine being a manager, a hedge fund manager right now, and calling up your clients and having I think the Nasdaq's up like 45% so far this year, and you don't have, maybe you're up 10 or 20%, and they look at your portfolio and they say, well, how much Nvidia do you have, and how much Ozempic stocks you have, right? How much AI related, and how much Ozempic related? Because those are just the two themes that are going on right now. And if you said none of them, well, man, they're probably going to go to the guy around the corner. So it makes perfect sense that near this end of the year, as silly as it sounds, they will buy some of the stuff that's up the most, simply so that when they face their clients, they say, oh yeah, we're in on the AI trade, in on the Ozempic trade. Don't you worry, I've got some Nvidia and I've got some Eli Lilly and some Microsoft and all of these things. So again, the phenomenon that we in the last slide of selling stuff that is down, and then the phenomenon of buying stuff that is up, because the stuff that's up is the stuff that's in the news and they're all hearing about CNBC. So my theory, and again, you'll never know for sure because a lot of these funds don't need to report, but this phenomenon of why strength continues and also why weakness continues makes perfect sense if you think about it in that perspective. So next, if we're going to talk about how we are going to use this concept of relative strength to survive these macro shocks, I have to define macro shocks to you. And what does this mean? Now, you're living in a time where we're experiencing a lot of them. You have an asteroid hitting and a thunderstorm and all of this from this clip art that I found. But let's just go through three parts here of the overall market and just talk about some things that have happened to us recently, right? So this box right here we call this the interest rate scare, or you could call it the trade war. This is when Trump and Jay Powell were fighting on Twitter about whether or not to raise interest rates or lower interest rates, and it created this chaotic couple of years. I think there was two official bear markets in these 2 years. There was a bear market recovery and a bear market recovery. We all know what happened if you were alive at that time. We all know what happened in 2020. Don't really need to talk about that too much, but COVID and the massive spike in recovery that happened from there. And then we need to talk about up here, we can call this the Russia-Ukraine invasion. That's kind of what kicked everything off. After that, it was, raising interest rates, inflation, all this kind of things. Now, how can we use this concept that I've proven that seems to outperform the market year after year, time after time, to help us with these events? Because if the only thing you did as investors is rotated into the best names when these type of events were happening, you would dramatically outperform the market, right? So that's kind of one thing that we're looking to do when it comes to trying to figure out these types of events. So we have three, which is amazing that we have. It's kind of sad that I only had to go back to 2018 to find three major macro shocks that we have to deal with. So let's say you weren't using relative strength and you were going to be one of those macro analyst guys that we see on Twitter Spaces, if you go on those, or on CNBC. This is all the stuff that you would need to know. So for the interest rate scare, you would need to know who would win the fight between Trump and Powell and what the ending interest rates would be, because Powell wanted to raise them and Trump wanted to lower them, and they were going back and forth, and I think he was bullying him on Twitter and things like that. You'd have to know what happens there. Then you have to know what stocks would do well in that environment. So you'd have to study all that, and you'd have to know this in real time, because this is obviously happening in real time as things are occurring. Next, you would have to go into the COVID class. So you'd have to be you'd have to be a virologist. Then you need to know what the government response to a pandemic would be. Then you would need to know that the lockdowns were happening and what stocks would do well during lockdowns. And then you need to forget all that. And then during the Russian invasion, you need to know geopolitics. You need to know what these countries export and how long this war is going to take and who's going to win. And right, essentially, you have to be this guy, right? And I love this meme too. That you see this guy all the time on Twitter, where hey, I'm done being an expert on vaccines. This week, I'm going to be a foreign policy specialist. And now, he's done being a foreign policy specialist. He's going to be a nuclear scientist. It's just there's no way that one person can be trained in all of these aspects. It's why I lean back on my hedge fund experience, and I know that these giant hedge funds are hiring these experts. Right? We are not these experts, but the hedge funds are able to grab someone. There's nothing for a Goldman Sachs or a multi-billion-dollar hedge fund to go, okay, there's a pandemic coming. Let me go and just pay $500,000 or $1 million to some virologist out there and have him sit down and tell us what he thinks is going to happen. And then he may even get it wrong. So no way we can keep up on this as retail investors, but we don't have to. Right? And I'll show a system that we have in Trade Ideas and everything how we're going to do this going forward. So let's say we want to build our own relative strength system, right? Because we know that relative strength and investing in relative strength will outperform markets in these periods of time. And again, I've got some evidence of that as well I'll show you. But how is it that we are going to do this if you're not interested in using the system that we built in Trade Ideas for relative strength, and you want to take a look at your own system? So the first step is you've got to define what strength is to you. This is the concept of this redefining of relative strength. All of the studies I showed you, although using a slightly different methodology, you could tell they were all saying if it's up more than the other stock, then it's relatively strong. And that was where the studies ended, which is good. It worked for them, but we want to be a little better, right? We want to go through and try to figure out if we can kind of move that needle a little good. So we got to define what we're talking about for strength. We've got to assign some sort of value on this, right? I talked about if we go to the Jadish study, it was 6 months of outperformance. That was strong, and then we'll just rotate into that name. Right? What we're going to do is we're going to do something a little bit clever, I think, and we're going to assign values and say, okay, if the stock is doing this, we're going to assign some values, and if the stock is doing that, we're going to assign some values and add up those values, and that will be relative strength. Then we'll have to filter them down. We got to find what those strongest stocks are. We got to point at them and say, okay, we have some mechanism now to assign relative strength. We have some mechanism now to say, okay, this is what we're going to focus on, and then we got to trade them in some manner. And there's a couple ways to do that as well. So step one is to define relative strength. And again, this absolute price move is the way that it was done in the GD study, and it was the way that it was done with Med-Weber's study as well that we talked about. So again, as a quant, I always want to prove this to myself. That's my whole philosophy. There's a lot of people who can say anything they want about trading. For me, it's okay, show me the math. And so what I just did is something you can easily do in Trade Ideas. I took the entire S&P 500 and I just sorted it by the stocks that were the strongest at the time I put this presentation together and said, these are the guys that are doing the best year-to-date return from the S&P 500. Now let's do an experiment. So I went back to 1980 and I said, we are going to take the top of those. We're going to take the top 25, I believe, and we're going to take a portfolio and we are going to rotate that portfolio each and every year into what those top 25 names are. So a condensed S&P 500 portfolio, and we're going to compare that versus the S&P 500. Green line is the condensed portfolio, red line is the S&P 500. So first of all, by doing any kind of rotation like this, you have a compounding effect that happens over time. Also, I just put the stats up here. You have 6% on average higher yearly gain. Now you have a higher drawdown, it's more condensed portfolio, but you can see over time how much you beat the overall market. $1 in the S&P 500 over this period of time turned into $32 in the S&P 500, turned into $256 in this very simple portfolio. Very simple, very easy. Indicators. This is my buddy, JC from All Star Charts. He's a great technician. Another CMT like myself, highly, definitely should check him out. So, and I just was doing a tweet about how I like RSI, or it's a relative strength index. It's an indicator you can find in any trading platform, but I don't like it in the way that traditionally people will say to buy or sell it, which is, hey, you buy it when it's oversold and you sell it when it's overbought. That's a presentation for another day, but I have a bunch of math behind why that's not the move. But finding stocks where that RSI is unable to get in that oversold period, that seems to present some relative outperformance. So simple example here in Dell, when I took this screenshot, you can see from about a year, this stock was unable to get to this oversold zone. For those who don't know, RSI is a simple measure of the average up move for the stock versus the average down move. So if the RSI is unable to get oversold, then you know that stock is generally trending higher. Again, within Trade Ideas, we have this scan as well. If you want that, we'll go into this with any time I have left. And just a simple, again, rotating into the top names based off how many were not able to get oversold for that period of time in the S&P 500 and comparing that to the S&P 500. Not as good as just buying stuff near all-time highs, but still a increase 6% year over year gain. There's a lot of people out there who just, a lot of fund managers who just cannot outperform the market, but this averages a 6% year over year gain. Again, another very simple rule set. Next is position and range. So all of this will make sense. It'll all come together in a second. But position range is simply, as opposed to a percentage gain, which is how all the other studies do it, we're going to do position and range. Position and range, we're basically normalizing the stock's performance. If it's up here at the 100% position range, that's the high, right? That's the high of the position and range. And then here is the low. So this would be a 0%. So what I'm going to do is I'm going to take the S&P 500 names. I'm going to say, hey, the higher you guys are up in your yearly range, that is going to be how you're ranked. I'm going to buy a portfolio of stocks that were higher up in the year range, and I'm going to ignore everything that was in the low end of its range. This would probably be about 50% in its range, so I'm going to ignore all those. This one was amazing. So this was 5% year over year growth, which was amazing, and a negative 5% max drawdown. So you lose less money. So this risk adjusted, this just beat the pants off those other two studies. Again, the point of this, I'm going back to 1980 and I'm doing this math myself and I'm showing it to you guys saying there is dramatic outperformance when it comes to simply buying strong names, regardless of how you define them. This portfolio in and of itself, you could probably take and manage money with it. People would love that. So let's slap her all together, right? So we remember these three macro shocks. And if we could do even a little bit better during these macro shocks and then get the gain of the S&P 500 as it moves higher, then we're happy campers, right? So this is the portfolio that I'll show you over in Trade Ideas, and I'll show you how we did it. One is, this is what happened during the interest rate scare. So these charts are basically a breakdown of what the portfolio owned, doing a ranking system based off of those types of indicators and position and range, absolute return that I talked about before. So it knew that, hey, if interest rates are going to go up and down, probably good to own utilities and manufacturing companies. Over half the portfolio landed in that. Because those, right, your utility and your manufacturing company, regardless of what happens with interest rates, they're going to pay you the same amount. Negative, well, going into it, negative cash flow companies, as we saw, There's a lot of companies that are really interest rate sensitive. These ones that aren't so much if they're fluctuated. Again, this system knows nothing about the feud that was going on there. It knows nothing about, I think the other one was the trade war. It knows nothing about any of these things, just not a thing about any of them. The idea is that it just says, hey, this is the strongest stuff. There's some reason why these are the strongest stuff, which we talked about earlier, and this is what the portfolio is in. During the pandemic, 28% in pharmaceutical companies, and then another 7% in the rest was kind of diversified between things that you buy. And we all know everyone got flush with money, they bought a lot of stuff, and pharmaceutical companies did great. Pfizer, Moderna, all these things did amazing during that time. Again, it's not like a fancy AI that could read the news and knew what's going on. Just when the market was selling, these names were not selling. And if you go back to those charts during the pandemic, they weren't selling the pharmaceutical companies because they figured that these would get a big cash infusion going in. Again, without knowing, that's the point. We don't need to know this stuff. We just need to study the market. So how did we build this system here? So how do we go through when we build this system? So this is just a sample, right? We obviously can't give out the actual nuts and bolts, but this is for people who are interested in building a system like this themselves. So for example, we took the position and range, that whether it's at the high of the range and the low of the range. We assigned that a value and we gave all stocks ranks, valuing them being up more than being down. Then we added the length of time that RSI was not oversold. We added that to it. We gave that a value. And we gave a value based off absolute return, right? And then we added and subtracted more indicators based off what we felt. A lot of people in trade ideas like myself that were consultants like myself are all traders. So, polled a lot of them. We basically built this system that just says, rank all of the stocks by all of these ideas, knowing that there's all of these academic studies and the studies that I've done behind it, and just spit out a number and let's look at the strongest stuff out there. And it just ends up looking like this, where you have the stock and it's just ranking them by how many points they got based off this relative strength system. So for example, FLR at the time I took this was pretty high ranked up there. You could see high in the position and range, a good yearly return, not oversold for a long period of time. It's able to go through and it's able just to say, hey, this is a name you should look at because there's stats behind it. Like I said at the beginning of the presentation, what I like to do is I like to take these stats and these numbers and then apply my eye to it, as opposed to trying to do technical analysis on every stock in the market. I'm just going to do, when I'm looking to buy stuff, I'm going to do technical analysis on the strongest stuff. And when I'm looking to sell stuff, I'm looking to do technical analysis on the weakest names. Makes my life really, really simple. So how do we use this? Now, as actual traders, if hopefully I've proved to you not to buy high and sell low and to look at this stuff, but to keep an eye on this relative strength idea. But how do you use it? So the first one's portfolio rotation. And you just simply say, okay, every period of time based off my trading time frame, say I want to rebalance my portfolio weekly. I want to sit down once a week and I want to say, okay, well, set up orders for Monday to sell all the stuff that have dropped out of whatever ranking system, and then to buy whatever else is in there. That's what I did with those models that I back tested. I just chose yearly. You could do daily, monthly, whatever it is. That's a simple way to do it. And that's how we actually back tested this portfolio that I'm going to show you guys here. Now, doing this, picking the top 5 names in this system. At the time I took this screenshot, which I think was mid-year, and then we'll update this at the end of the year. It was up 25% this year, where the S&P 500 was up around 15. So good relative outperformance, doing absolutely nothing but just rotating your portfolio into these names. Now, this is the overall growth from 2017, the beginning of 2017, in which we started this experiment and we built this system. Again, you can see the relative outperformance. Again, it's a long only system, so sometimes when the market sells, this thing has hiccups just like anything else, but overall, just a good proof of, hey, this is the stuff you should look at. The other thing is stock selection. For me, This is how I use relative strength, and it's how I use this system. It is very liberating as a trader to sit down at your desk and know that this system is going to spit out stuff, and there's going to be some sort of statistical advantage to looking at these names. A lot of, as a scanning software, and when we can scan for all kinds of stuff, which I'll show you guys, but as a scanning software, a lot of what we get from clients all the time is, well, what do I look at? Well, it depends if you're a day trader, if you're a swing trader, how long you want to trade, what are you trying to do, what are you know, what's how much money you have in your account, all of these things, you know, a lot of things. But for me, I can just sit down and say, well, here's a list of the strongest names. Let me take 10 minutes every night to scan through them, see if there's any that I like. And here, you know, we have one for the weakest names as well. Here are the weakest names. Let me scan through them and see what's happening there. So just back to this FLR chart, you know, you could simply take a look at this and you say, oh, well, here's a cup. So now that I know that this is on the ranking system, let me buy it if it does this and put a stop loss here. And you're still in the market and you still have that human element to it. But that human element is on top of statistics. And then bottom up analysis. So this is only for the real nerds out there. Most people, myself included, do a lot of what we call top-down analysis. And top-down analysis simply states, let me grab the S&P 500, right? Then let me grab the sectors in the S&P 500 and then go into the individual names. And by doing this top-down, I'm going to try to get some idea of what's happening. And that's good. A lot of people do that. The other thing, you do bottom-up analysis. So for example, if you're seeing that this relative strength system is allocating a lot of time and a lot of money into certain sectors, even if you don't like the names that it's telling you to buy, you could say, well, there's a lot of pharmaceuticals in there. So let me just go and say, okay, if pharmaceuticals are relatively strong, that's great. I don't need to do this top-down analysis. Instead, I'm doing a bottom-up analysis, which I can just say, let me look at the pharmaceuticals. You know, maybe I have a pharmaceutical that I like for some fundamental reason. I'm not a fundamental trader. Maybe you've got one, you're like, hey, I really like this because of this fundamental and that fundamental reason. Well, now that it's relatively strong to the overall market based off this criteria, now maybe it's time to take a look at it. Now, day trading. We do a lot for day traders. If you are a day trader, then we definitely got some stuff for you. The idea could simply be, well, I'm going to look day trading every day at the strongest stuff. And this is what a lot of our day traders do. I'm more of a swing trader, there's a lot of gray in this beard from back when I used to be a day trader. But I do dabble sometimes. And we have these scans that I'll show you as well that are just going to show you the stuff up the most and rank them by how much they're up. In this case, change from the open each and every day, or every 10 seconds, I think this updates. So you can constantly see stuff that's, you know, moving up the list and say, oh, this is something that's interesting that's coming out of nowhere. So that is the presentation part of this. We're going to get into the system with a little bit of the rest of the time I have, show you guys around. But as always, if you're interested in this system, you want to give it a shot at all. This, you know, if there's any questions that come throughout, let me know. I've got my eye over there on the question panel. But go to trade-ideas.com, use StatsEdge25 on checkout. And I'm just going to type that in. I don't know if I type it into the...
I already did.
Oh, perfect. Thank you.
Yeah, you have to put it in the chat, whereas everybody speaks to you with the questions.
Perfect. Thank you very much. Yeah, so use StatsEdge25 checkout, saves 25% off your first month or an entire year if you want to try an entire year. But let's get into, let's show you around a little bit with so first of all, another thing I wanted to talk to you guys about, we just launched this, so I didn't have a chance to put it in my presentation, but we are now doing challenges. So we are now doing, we had our first one, it did fantastic. I interviewed the winner last night, he was a great guy. We have paper trading competitions that we're doing over here at Trade Ideas. The idea behind this is that we want to give people who are new to trading incentive to paper trade. And this is something that we strongly believe in. If you don't have your system worked out yet, you don't know quite what you're doing, you should paper trade. But it's boring to paper trade. It's, you know, no one wants to sit there and just play with fake money and work out a system. Well, not no one. I do. I'm a nerd like that. But so you can enter these competitions for a very low price and you can win. So the total prize for this one, which is from December 19th to sign up, yeah, December 19th to 21st. So only 3 days. The winner of this competition we'll send you a $2,200 Amazon gift card. Last one was 17, so we're up in our game this time. So if you want to check that out, you can check that out. But when you are on tradeIdeas.com, if you want to play around a bit before you use Stats Edge 25 on checkout, you can just click free trade ideas right here, or be the first to catch a stock, and it takes you to that first page that I was talking about for you day traders. And there's two versions. There's a web version that has some functionality. There's also a downloaded version, and that has other functionality, and we'll talk about that in a second, based off how much power things use. So right here, you can see these are the change from the close. Let's do change from the open. This is the stuff that's up the most from the opening price. And you can see this is refreshing all the time and showing you what's up. This is just a simple browser-based version. You can get a lot of information here. This is the amount of stocks that are up or down the most on the day, everything that is happening in through here. You click on this, it will obviously update the chart. We have the ability to drawing tools on the chart, indicators, a lot of this stuff that you guys know and love. But while we're here, I just wanted to show you that if you enter our challenge, we have this really cool dashboard, and it's a communal investing thing that I really like. So these are the results of our first challenge. You can see me right there, number 6, 100% gain in 2 weeks. Wasn't nearly enough to crack the top 5, which is how crazy these people are going. And this is our winner, Scott Trades, who got that $1,700 gift card. The cool thing about this, it's fun just to watch this as well. And I'll just note here, there's a couple other people here who are TradeIdeas employees, but just note that they are under me. Just a little fun smack talk there. But also, we have this scan right here that is actually looking at what these people are in. What were they buying and what were they selling? And you can go through and take a look, as just to keep in mind that, hey, I want to trade whatever these winners are trading. It only takes the top 10 people, and it takes the stocks that they're looking at, and it just presents those to you as a cool way to get going here. You see Upstart, someone's trading right now. It's a nice looking chart there with a 45% short float. Wow. So I'm actually going to make a note of that because I am a trader, and that one's pretty interesting to me. But let's get into the download product and look at this relative strength system, because that's what we're here to talk about. So if I take this and I click there, I believe I did that right. Perfect. I see that on the screen. So this is TradeIdeas, the downloaded version. There is a whole bunch that you can do with this system, but we are going to focus on the relative strength system with the little bit of time I have left. But just FYI, quickly, just so I basically telling you that I'm only scratching the surface of what we can do here. We have an artificial intelligence here that you can see suggests stocks based off a series of algorithms that we build, and it basically back tests those algorithms. You can see how I'm a big quant nerd. I do a lot of building with this, and it just shows you here are the stocks that are up. There's probably some that are down, but we just try to, we ignore those because once they've hit our stop, we're not interested. But here are all the different stocks today. So you can see it bought this Paramount right at this area right here on this gap up. It bought this ARVN right here. So it's suggesting you entries, stop losses, profit targets, that type of thing. You can kind of check these out right in this area right here. Again, we have pre-market gappers, we have low float momentum plays, Fibonacci's, all of this stuff. And this is all pre-built. And then I just want to quickly go, if you want to take any of these scans or build your own and customize them, I'm just going to take a second while I take a sip of my water and just hit the down button here. These are all of the different filters and alerts that you can change, so you can customize a scan based off all these metrics to your heart's content. But again, for the sake of time, we're not going to go through that. We're going to focus on the relative strength system and look at some things that are showing up there today. So there, we just reached the bottom. Again, all of these different things you can go through and say, hey, this is something that is interesting me or not. But we have our relative strength algorithm right here. So there's a couple components to this. One of which is the fact that we're grabbing these top 5 at the end of every week. And when we're grabbing these top 5 at the end of every week, what we're doing is we're actually giving you these along with some suggested triggers and stop losses and all this stuff. Again, not investment advice, but what the algorithm is showing us. So a little note on the market from myself, along with looking at, hey, FRPT, this was one of them, was a little breakout. That one's doing really well. I think a lot of these are kind of just chopping around though. Roadblocks, right? This is what we're looking at, and this is why. All of this stuff is presented to you. Now, then we also have this heat map right here that will show you all of these different names. So these are the names that are on the list right now. Again, these heat maps can have a lot in them. In this scan, it just has a little bit, but you can see all of these. You can just click through them. These are the ones picked this week. But if you want to go a little further and you want to say, hey, I want the ones that are moving right now, we have this scan. This updates every 30 seconds. So it takes all of that crazy math that I talked about, and then every 30 seconds, it runs it off every stock that exists in the entire market, and it just spits them out to you. Again, this is my favorite part, I would say, of Trade Ideas, because there's so much you can do with this scan. Sava, for example, I bought some today. It was on the list, and actually, because of the 37% short float. So on top of the charts, top of all the different scans, we have this box right here that I love that we call the single stock window. This is where, again, you can add all of these data points to it. That whole list of data points that I showed you, you can add any of these to it, and basically just tells you a little bit about the company. So I don't know anything about this Sava Sciences, but I know it's doing 2 times normal volume today. I know it's got a 37% short float. I know it's down 17% this year. However, because of all of those metrics that I talked about, it's showing up pretty high on the list. So I can take all of this, I can do all my fundamental analysis. You see the news right here. I can read through all the news and see if there's anything going on. It looks like they're doing something for Alzheimer's disease, which would be amazing if it worked. And then, yeah, I can just simply, as opposed to trying to say, well, what do I look at in the markets? I can just click through these. I know that all of these, that if I just rotated my portfolio into these, there would be a relative outperformance to the overall market. And you can see these things update in real time. So I think we are good to go. Michael Nauss, CMT, on Twitter, on YouTube, on Substack. I have a Substack that I put out. But the easiest way is just to go to my personal website, statsedgetrading.com. All of my socials are there. You can sign up for my Substack, where I don't, I work with Trade Ideas, so I don't have anything other than that to sell you. And it will just, I send you my analysis on the markets a few times a week. One will be tonight. So if you want to sign up for that and get those emails, I think that'd be a good way to do it. Now, I did see a question about the cloud links. I think I sent that over, so that's good. So that should work for you. If not, again, just hit me up on Twitter or something like that, and I'll get that over to you. I love these events, and I speak a lot of these events, and I watch a lot of these events as well. And I just wanted to really emphasize what you said. The beauty of things like these is that you're going to hear from a bunch of traders with a bunch of different philosophies. And it's important that if you're sitting there and you're getting overwhelmed and you don't know what to trade, don't focus on the returns that someone's talking about. Don't focus on any of that. Focus on whether or not their system makes sense to you. Early in my trading career, I spent a lot of time trying to emulate other traders. And as soon as I kind of abandoned that, and I found the one that kind of made the most sense and more importantly, fit the most with my personality, that's when things started to go very, very well. So, if you saw my presentation and it wasn't for you, that's absolutely perfectly fine. Maybe the next panelist that comes up, you'll really, really resonate with what they have to say. Then, great. That's who you should focus on, right? So try to find a trading style that fits your personality. Don't try to make your personality fit a trading style, if that makes sense.
That's so true. So true.
Yeah.
Michael, thank you so much. I hope you will come back again next year in 2024.
Merry Christmas, happy holidays, whatever you celebrate. And it was awesome being here. And I will definitely see you guys next year.